All right, welcome everyone, and good morning. This is Bob Maurer. It's been after 10 o'clock a.m. my time, 1st of April. I want to do an update of the current seasonal futures spreads strategies. And basically, to summarize, we are out of every corn spread timed out last week. Unfortunately, the three livestock commodities we were in feeder cattle, live cattle, and lean hogs all hit their stops for a loss. So, bad run in the livestock sector. Take a look at each one of those, see how they evolved, and make sure everybody's on the same page. Dialing into the portal, you'll see the most current PDF version uploaded this morning. That's for this week of 420. Yesterday, or last week, I should say, was a shortened week because of the Good Friday holiday, exchange holiday on Friday. Moved pretty quick. Yeah. One of the reasons why I didn't do an update last week is the market. The week just kind of caught up on me. But anyway, I haven't really gotten into any new strategies also just because of the big volatility in some of these spreads. And take a look at how things go. Here are the four spreads we had: 350 through 353. 350, 351, and 353, all livestock sector, fat cattle, feeder cattle, and lean hogs. And we had the bear spread in. And as you can see, we got flat from being stopped out, livestock sector, and then flat timed out on the seasonal for the corn future. Take a look at number one. We had the fat cattle strategy number 50, I believe. Yeah, 350. So this was revised relatively recently, 4-1, I believe. Moved the targets higher, but kept the stop where it was. Got within 4 ticks of target one, part of last week or late part of the previous week, and did not get filled, obviously. And then the market basically moved sideways for a few days and had an explosive move on Thursday, followed through today, and hit our stop. So, fortunately, we got stopped out with a loss on this one, and we'll see how this plays out. Clearly, at this point, it looks like it was stop fishing. Like there's not a whole lot of momentum, but we have to let it trade for the next few hours until the close to see if it's going to push on up. But basically, it popped up just fish for stops. And there's always the thought that we wish we would have moved our stop or waited for a close only. But then at the same time, if it just kept going higher, the risk gets out of hand. So we have to stay disciplined with our stops. So it looks like it would have been somewhere, if you averaged in about $1,000 per two lot that you averaged into, that would have been the loss. Happened today. And then if you're a more conservative entry level, sitting around $5 or so for a loser. All right, so that strategy number 350 did not work out for us. Feeder cattle 351, revised on 4-4. Basically, we had, I don't know if you recall, but taken the whole strategy and moved it lower. Originally, we were in before this big break. Market looked like it was getting away from us, but my interpretation of the back data was that it was still a probability of moving lower. Lowered everything, entries, exits, between the stop and the targets. Fortunately, that didn't work out for us this time. So we've been a loss of somewhere around 725 per spread. It was not an average in scenario, thankfully, so we didn't have to take any risk, or a little bit higher. It's always trader's prerogative on anyway, but how much risk you want to take looking off any of these spreads that you'd like to. But good thing we didn't have an average in scenario, so we kept the risk manageable. The market had a pretty explosive move to the upside over a couple day window, and basically our entry level and the stop on the same day. Fell back about halfway, but really wasn't any more new momentum to the downside, and then they revisited the stop. So even if we had avoided getting stopped out here late part of a couple weeks ago, looks to me like we would have been stopped out anyway, unless you're aggressive on your stop. So it's always trader's prerogative. Do as you wish in terms of managing the stop. You don't always have to do what I recommend. Obviously, just do what you do. But anyway, if you stuck to the plan here, it would have been stopped out with a loss, like I said, of around 725 per spread. So this one also did not work out. So that is strategy number 351, going to go off the books as a some level of realized loss. Then we'll skip to the Hogger 353 also. Unfortunately, stopped out with a loss to the tune of about 300 bucks if you were the more conservative entry level, to just 900 bucks if you averaged in. So again, bear spread in the livestock complex did not work out here, even in the pork complex. We saw the cattle's didn't work out, and this one pretty much the same. Had a pretty good pop to the upside. Now this one hasn't revisited the highs here yet, so maybe it stalls and pushes lower, and we just unfortunately had our stop a little bit too tight relative to where this market wanted to go. But nonetheless, we still have to define the risk. It's always trader's prerogative on whether or not you want to do the stop on a close only basis or stick with it throughout. Just stay with it intraday and perhaps get stopped out. But and then the market falls down like it did. But here we are. The market basically had that big pop to the upside, then fell back. Now it's moving sideways. We'll see if there's anything new coming in the hogs over the next few weeks. So, my instinct would be to probably avoid being on the short side. So these livestock markets show some kind of real weakness evolving in them, and I'm talking about the underlying leg. All right, so this one's going off as a loser, strategy number 353 in hogs. And the one winner was corn, but very modestly so. This was a bear spread in corn. Only entry level that it allowed us in was the first level for more aggressive traders at -7 cents. In range on the last trading day, which Thursday last week, was about 3/4 wide. Could have been anywhere from -8.25 to -7.5. Settled at -7.5. So roughly about a half-cent winner if you waited till right towards the close there and you were able to get that. So modest winner of a half-cent, that's 25 bucks. Maybe at best you would have gotten 37 and change. But anyway, it worked out, which is good, but much modest gain compared to those losses that we saw in hogs, live cattle, and feeder cattle. All right, so this one went off the board at some level of realized gain, modest level. So that's where we're at. We clean the slate off to those few weren't necessarily the greatest, obviously, because they all ended up being losers at our stop level. See how things play out when those markets near term. See if there might be another opportunity. That is where we're at. So I will let you know as I get through the tail end of this analysis of some seasonal spreads that are evolving currently. I'll send out the letter to let you know those are available to review and see if you want to do that. I'm also going to start publishing some butterfly spreads. So it's a crazy environment. Butterflies can lose money also, but at the same time, tend to be a little bit less volatile in some of these pretty outrageous moves that we're seeing in some markets at the moment. Therefore, I'm kind of leaning towards that. As you can see here, grain markets are down a little bit today. Corn, so steady to better. Actually, the futures down, soybeans down, livestock markets are down. And even though they're down, we still got stopped out. Hog is down, cotton futures are down. If we go to the softs, coffee's down a nickel, OJ's down 9 cents, cocoa up. Seeing some pretty big moves. If you move over here we got the precious metals. Gold's up 100 bucks an ounce today. Silver's up 16 cents or so. Platinum and palladium trading lower. At the energies down here, with crude down almost $2, heating oil down 4 1/3 cents. RBOB down 420 points. Gas down about 60. So extreme moves, and then you got the indices up top here. S&P today, Dow's down almost 1,000 points. This is stuff that we're kind of dealing with right now. Normally, the spreads. I mean, clearly, if you were in the outrights, in my opinion, the damage could have been a lot higher depending on how you manage your risk. So I'm glad that we're doing the spreads even though they're losers, they tend to be less dollar value losses than if you were in the outright futures. So I like the fact that we're there. I don't like that we're taking losses. That's horrible. I need to make sure that we're on the right side of these markets and start getting some gainers rather than taking these hits. Okay. I'm very competitive. I hate to lose. So let's just hope things size up nicely in terms of the seasonal tendencies going forward back. All right. Enough said. I'm going to leave it there. If you have any questions, comments, anything of interest, feel free to let me know. And thanks so much for watching.